Hi everyone, hope you all had a great weekend. We haven't had any market wrap videos for a while because really we're in a moment that if you just look at this chart pattern right here, you can see that if we're going to really repair any damage and get going and produce any meaningful upside gains, we're going to have to do quite a bit of backing and filling from these levels. You can see every other time the Russell 2000 has done this recently, we have V-ramped right back. Here we really didn't V-ramp, so this is kind of what I expect to happen again from the April to May to June lows. I kind of expect what we see here to at least happen again if we are going to continue to rally higher. While that may not be happening because we are in seasonally the two most bullish periods for stocks, the fourth quarter of a second year in a 4-year presidential cycle and the fourth quarter in a 6-year of an 8-year presidential cycle. These are bottom line very is a very bullish quarter. It's October when you can start big market rallies, but it's also October where you see crashes. And we've had a very weak market. We have extremely weak breadth. It's not like breadth is getting better. So we need to probably expect with the weak breadth that we're probably not going to rally back in a V-shaped manner like in February. That it'll probably be more like April, May, June. But still, even then, look at how far we went in June, July before coming back down to the lows, before V-ramping again, trying to get to new highs, before V-ramping back down new lows. This is a new norm of a market, and like I keep trying to tell people, when I made the decision to move out to Maui in the late 90s, I did my research of winning stocks of the 1880s. I had my Bob scans from 1996 that produced big winners. And I knew that to make significant money in the market, day trading wasn't needed. Wanted to live on a wonderful island where I could surf and live in perfect weather. Made that choice. Worked out for about, I'd say, 10 years. And then in 2009, I lagged the market and have continued to do so until 2013, where I kept up with it in 2014. We're beating the market, but we're not producing any huge gains. And the huge gains where we keep seeing is whenever we pick stocks to day trade. We're really good at these story stocks and intraday watching them, putting them on watch lists. Sadly, my lifestyle doesn't dictate that I can be around all day long, but many subscribers are following the stocks, and when they make big intraday moves like Lake did on 10-1 and like NXTD did a few days ago and then again today, we're on Friday, excuse me, we're on it. We know which stocks are in play. Apple Pay stocks, cloud computing stocks, Ferguson Missouri stocks, Ebola stocks. We're on those intraday and watching them, and we realize that's where the big money's made. Sadly for me personally, can't be around all the time, so other people are benefiting from this. But the point of this is to be made is that just because we saw the market bounce on Friday doesn't mean we're going to run back to new highs. I see everybody either hardcore bullish or bearish here, and there is so much mixed data that I can't see how you can be anything but neutral. I don't see how you can be bullish here with this short-term chart pattern on the NASDAQ, this short-term chart pattern on the New York Stock Exchange, how you can be bullish with this Russell 2000 pattern without seeing lower volume here on the final leg of the sell-off and huge volume on this bounce attempt. Unless you see huge volume on these two reversal days and lower volume on these days, I'm sorry, something's wrong. So I'm going to continue to be careful and operate from a safe point of view. I know some people think that it's easy and that you should just focus on GoPro. That's hindsight. There is no way you could have known GoPro was going to be the one stock to keep on going. And Twitter, you sold out of Twitter. Yeah, but listen, I'm trying to tell you guys, these patterns were never this choppy before. This chop is going to take you in and out of positions, and it's going to happen. You can't get upset by it. You just got to let the market calm down and you can make money again. Right now, we still have such low volatility overall that we're not going to get huge gains. And so when you have that on top of choppy patterns, it's going to be rough. Fortunately for us tonight, we have a couple of long signals and patterns that are not choppy, but they're not perfect. For instance, CMG here, CMG, if I just take a look at this chart, I already don't like how many down strong opens, weak close bars that I see. While I see a lot of bullish bars, there isn't as many intraday big huge tail reversals compared to the down days. So while it isn't great, the good news about this selection tonight is that we held the gap up lows. That's a huge sign that the stock is strong. We've retaken the 50-day moving average. We've done it on above average volume with the pocket pivot point signal. That's a lot of items in our favor. However, the market's kind of iffy, so what I'm going to do here CMG is going to be about a 1.5% account position. I believe on the website put 1%. Earlier I put 2%, so 1.5% is about what I'm going to go into CMG. If we're wrong, not a big deal. A close below the 50-day moving average already tells us that it's not wrong. We got to leave immediately, just like Lulu. Remember, Lulu was a new long on Thursday. Technically after Friday, there's nothing wrong with it, but two things happen. BOP did not remain max green. Should have remained max green with all that previous max green. Even for a lower volume down day, shouldn't have lost its max green. And it should have been flat. So that's right, Lulu's a 50% sell. At the same time, SUSP didn't move higher immediately, but as you can see, it's only down 3 cents from where we got filled in the open at 55.03. So it's basically flat, lower volume. It's a complete hold. But if CMG does what Lulu does, it will be a 50% sell. If it does what SUSP does, it will be a hold. So they have to move up immediately. But once again, if we are wrong, the most we risk, 2%. We probably won't be risking more than 2% if we're wrong. And our other long signal is in another stock that's gapped up and is holding its gap. Monster Beverage Corporation, which, by the way, food and beverage stocks, they were everywhere in my scans. They got ConAgra here. BF.B with a great move off the 200-day moving average. SAFM, Calm. So we got some moves in some food stocks, PPC, and all that tells me is that on Friday's up day, if the market was so healthy, how come we don't have 3D printing stocks, cloud computing stocks, biotechnology stocks, which we did, by the way, ALXN, nice breakout, BIB, nice move. But how come we didn't see more of them like leading the way higher like Celgene? You know, how come we didn't see all of these things that put in beautiful moves and new highs? Compare the biotech stocks overall to the food stocks, and you'll see you have much more bullish chart patterns out of the food stocks. So it's no surprise that Monster Beverage is giving us a pocket pivot point buy signal as it breaks out to new highs. This is also, the stock closed weak on an intraday basis overall, but still had a good intraday session. We're only going to be risking 1.5% of our account capital in the position. If it closes below the low of the day, the most that we risk is once again 2%. So this is a trade that's worthy. We have a strong sector, but what I was getting back to saying is it's not good that on an up day our leading sector is food and beverage stocks. Food and beverage stocks isn't really a vote of confidence that this next leg higher is going to be a very powerful leg higher. So besides that 50% sell in Lulu, is there anything else we have to do? Yes, unfortunately, SDOW. I want to take off 75% of that hedge that I just put on, and SQQ, that hedge add that I put on October 1st. I want to take 75% of that hedge off, but that's it. I want to keep the rest of these hedges running, SRTY, SPXS, SQQ, and then even the small remaining SDOW until there's more confirmed strength. This is only day 2 of a rally attempt. It's very new, and whenever I have food stocks leading, that's not really saying that, okay, this is going to be a great new up leg. But once again, we are going into a very bullish time of the year. It doesn't pay to fight the trend. Also, NAAIM bullish advisor, like I think asset allocation is down to 43%. That's had bounces lately, and the put-call ratio has been over 1 for a little while now, which is indicative of a bounce. We'll see come Monday. Thank you.